Well, good day, traders. It's been a busy day today. Certainly a lot of people pre-positioning their portfolios ahead of the Bank of England and also, of course, the Federal Reserve meeting, which comes out at 4 o'clock Eastern Standard Time. Then we get Jerome Powell speaking 30 minutes later. That is probably one of the most anticipated central bank meetings we've had for some time, some years. Will it deliver the fireworks that some people had suggested? If we should look at an overnight implied volatility in dollar yen and Aussie dollar, it's actually fairly low. People are pretty comfortable that we are going to see the Federal Reserve deliver what they anticipate to deliver, which in effect is a 25 basis point cut, an outlook that suggests that we'll probably see another rate cut by the end of the year, and also potentially a strong categoric view on what's going to happen with the balance sheet normalisation program, which people call quantitative tightening. Will actually this be formally finished at this meeting, or will they give a strong view, calendar view as to when that's going to go? But there's obviously a very strong playbook, a different diverse playbook about how this is all going to go. We're watching the dollar, we're watching front end yields, we're watching what's happening in gold, and certainly the reaction into risk assets like equities and credit. But certainly the market is the implied volatility is actually quite low, so people are comfortable with what we're happening. I'm going to take my view on what happens from Jerome Powell's voice, and the tone around the economy I think is absolutely key. If they do want to create a surprise, of course they can cut by 50 basis points. We'll see a steepening of the curve, the dollar will sell off, and risk assets like equities and gold will find some strong buyers on that. Of course, if they don't cut at all, I think the market's going to throw a bit of a wobbly and we're going to see a big risk-off move playing through. So certainly one to watch. Bank of England, of course, they're setting the scenes for what could be a response should we see a poor fallout from Brexit, which is looking more and more likely according to market pricing. But if we have a step back and have a look at what we're seeing across Asia, well, the Hang Seng is down 307 points. I will stress that AIA Group has a 10% weighting on that market. It's down 1.5%. So that stock alone is taking 45 points out of the market. The Japanese market's down 210. The Chinese market's down a little bit there. We have seen some PMI numbers coming out of China today. 49.7 on that index. So the manufacturing side on the National Bureau of Statistics is still in contraction, but it's somewhat better than what we were looking for. Nothing too sinister in that. Also, we have seen in Australia today, we can see the market up down 16 points. We can see Aussie dollar 68.86. That had a little bit of a pop when we saw Q2 CPI numbers coming out at 1.6 on the trimmed mean number, which is the one that the RBA look at, effectively the core inflation number, 1.6. The market was looking for 1.5%. Doesn't really give them much scope to raise rates. It doesn't really give them much scope to ease either. And I think the market was obviously very, very short in terms of the Aussie dollar, hence why we've seen about a 25-point pop based on this, with basically the idea that gives them less scope to even cut twice throughout this year. But of course, if you look across the space, gold's fairly flat. Our opening calls for Wall Street and Germany and the UK are looking somewhat constructive at this stage. But this is the period where people are just pre-positioning themselves and asking themselves, what if the Fed cut 50 basis points? What if they cut 25 basis points? What if they don't cut at all? How does this all feed through into my exposures, and how is that going to affect my positions? Of course, a few people are reducing, people are increasing their positions, but it's very, very prudent to understand how this could affect you in your portfolio there.